Good morning and welcome to the Early Bird. And here we're looking at the ASX 200 of the CFD bit SPY basically. And look, what we're looking at through here is that we've got this move down through here, which we'll consider wave one, and then we've got wave two coming back to here, and we've got all the way down for wave three down here, and we're going into wave four at the moment here, and then we'll have another wave five going down the same length as this move through here. So we'll be seeing ourselves go lower into the 4300 mark through here. This particular structure through here is in 5 waves in terms of a bit tricky, but down for 1 here, back for 2 through here. This is the 3rd wave all the way down through here. This is the 4th, and this is the 5th wave coming down through here. And in the 5th wave you can see the 1, the 2, the 3, the 4 and the 5. So it's working its way down through here. If we have a look at this in a bit more detailed on the SPY here, this is the top of wave 2 here. So just bringing this in through here. So we've got that wave 1 coming down through here, wave 2 coming back, and then the wave 3 unfolding out. I won't go into a lot of detail, but I've spent a fair bit of time just breaking down every little bit within through here, but a whole series of waves 1 and 2s and 1s and 2s and 1s and 2s until the 3rd wave starts unfolding out, then the 4th wave through there, and we're still looking down for the final 3rd wave down through here. Once that comes into play, we'll get some sort of 4th wave back, and then a wave 5 coming back down. But the bottom line is that we're sort of moving down to the 4-3 mark down through here. And yeah, actually while we're down here, we might as well just have a look at the bigger picture through here while we're here. This is the daily chart through here. This is the daily chart through here. Just bear with me here. Basically what we're looking for through here is we've had 5 waves up through here in terms of an impulse wave in this bull run through here. So we're looking for 5 waves up through here. This would be that's the 3rd and the 4th in there, and the 5th up to there. So look, what we're kind of looking at through here now is we're looking for some sort of ABC correction in this terms here. So like the A wave, the B wave and the C wave coming down. So you can see this 61.8 retracement here, and at the 4,000 here we see the 50% retracement level. So normally when we get 5 waves coming up through here, we'll get an A and a B and a C come back to the 61.8 retracement level. So anywhere into the 50, 61 here, this would be sort of the logic sort of area for this here. And just bear with me here, I'll sort of get this sorted out a little bit. So we're in this structure coming down through here, and this is quite viable down through here at the 38 here and the 4,000 here as a 50-60% retracement level. Now that it's broken through the 4-5 through here, sure, these old lows down here at 4-2 are going to cause a bit of headache, but the SPY is already at close to the 4-3 in here already. So we are moving down through here now. And what we're looking at through here is on the daily chart here, you can quite easily see that we've got in this structure here, we've got down for 1 here, back for 2, and we can see the strong 3rd wave unfolding down through here. So we'll still see a bit more of this, and the 4th and the 5th to come down through into the 4-3 here. So we'll be holding sort of short here. One of the problems facing us now is the August 2 deadline. So that will be in the US on the August 2nd, the Tuesday there. So yeah, we could see a sharp bounce up through this once we've got our little 5 waves down through here. We could see the bounce bring us back up 50 or 60% if they decide to cover it, lift the ceiling at the last minute. And if they don't, then we'll see a much sharper move to the downside, taking us, pretty sharply to the downside. So we'll trade for that downside movement though in terms of the daily robo methods on a lot of stocks, but as this has been, we've been short coming down through here. So as this comes down further on the Monday, we've suggested to take 30% profit on the Friday close in case there was a bounce up. There wasn't, it's still softer. So on the Monday, take another 30%. This is just general sort of rules, do your own thing, of course, but scaling out down into this area here and locking in profits in case there is a bounce is not such a bad idea. We're just playing the middle of the road there, but Because these lows have been taken out through here, and we're seeing 5-wave structures moving to the downside. So there's still more to come there. So we've got to be sort of careful about that. On the S&P 500, however, though, we're looking for that sort of larger triangle pattern unfolding, and we'd be looking for the ending of that. Well, we have been looking for the ending of it within here, and there's still more to come there. So just looking at this this particular structure within here, just bear with me a second here. So we're looking for you'll see this on the charts on the section, but down for 1, back for 2 here, and then we're looking at this little 5-wave structure coming down here. So there's still a 4th and a 5th to come down through here, and I was looking at the 1272 area here being the sort of low within here. Now, if the US Senate agree on lifting the ceiling, well, then we'll see the bounce back up from this point here, and this would cover the wave 5 of the E wave of a large triangle pattern, and we'll see that bounce up from there. However, if they don't agree, then we'll see this triangle pattern not as a triangle pattern, but as the same as the 2007 top, and we'll see this roll over from here. So when we're looking at if we look at this in terms of a daily chart here, just I can't remember what work I've done on here, but we'll just see, right, okay, it's there in some form. So let me just so this is the triangle pattern in terms of the A wave, the B wave, the C wave, the D wave, and now we're coming into the E wave here, and the E wave here would be try and come in here a little bit. So you can see that we've got the A wave, the B wave, and the C wave here to make up the larger E wave. So we're looking for a low and a bounce there. So it could already be in place, but we're looking for another little leg down into the 272 area to push off from that area there. So it's going to, as I mentioned before, this whole area is going to be a critical point, and we need to keep a close eye on that. That's the same for the UK market as well, and also the US as well. So on the US, it's slightly different. So with the US, we're just following the wave countdown in terms that we've got down for wave 1, back for wave 2, and then we're looking at 5 waves coming down in terms of 1, 2, 3, 4, 5 here. So the low could already be in play here, but I still think there could be a 4th and a 5th wave here. So we still need to allow this to play out here. We know that the 1,200 was the 61.8 retracement level, so that would have around this area here would be expecting some sort of low here. But I've just been counting the little waves down here. So bottom line is that this is either the low, this alternative count is the low right in here, with this is the A, the B, and the C wave right at this low here. So that's the low right there, and would be pushing up from there. Or if we get the 4th wave here and the 5th wave coming in through here, which is likely, then we're going to be seeing more downside patterns within this as well. So we could say that if the market finds the 12,000 as resistance, then we'll be seeing more downside. But look, this is all going to all this low area here is going to sort itself out on the Tuesday in the US, either seeing a powerful move to the upside or seeing a powerful move to the downside. So it's important not to get trapped in the market with positions that you can't handle in the market there. It's better to miss the move rather than to guess the move and over trade within that move. Yeah, so I'd rather miss it than take a loss. So yeah, a bit of a tricky one, all of that. The drivers for this, the crude market here, not particularly a driver as such, because it would just be following the market as such. But what we are seeing through here, and you'll see this on our charts, but a slightly different count on our charts, but still looking for 5 waves down and further moves down. what I've done here is I've got 5 little waves in through here for wave 1, a little ABC for 2, and then 5 waves for the third wave in here in terms of down for 1, back for 2, the third wave into here, the fourth wave to here, and then the fifth wave would be the 1, the 2, the 3, the 4, and the 5 for the third. The fourth wave coming into here, and we're using the levels as well here. We've talked about the 96.50 here, the sub level, which is the 50% between the 95 and the 98 here, the 98 being retested at supply levels here we're talking about, and seeing it roll over from that point there. Now we've got I still think this fifth wave coming down here still got more to unfold in here, in terms that it would have down for 1 in here, back for 2 into here or to here, and this would be the third wave here, and the fourth wave and the fifth wave folding down through here. But one way or another, because either this count that I'm just showing you here now, or the count that would be on the on the charts in the oil section there, because there's a slightly different way to count this as well. Whichever way it is, we've got 5 waves down, so we'll see some sort of retracement back up and then another 5 to the downside. But at the end of the day, it will just follow stock, so just be aware of that there. On a bit of a positive note though, we've got base metals. This is copper here, and still working its way higher through here. So we're seeing it really sort of tackle on to the 450 here, and it does look sort of positive from here. While it's above the 450, we'll consider it positive, and we'll consider the 450 being taken out, so a move up through here. But this move through here, we can consider this an A and a B and a C wave coming in through here, then a push up through the 450. But if 450 finds support up here, it's a very positive thing for the base metals. We'll just see how that plays out. But while it's above the 450 and in this trend channel here, we'll consider it positive, and copper and nickel were positive. Zinc and aluminium were slightly sort of negative, so a little bit mixed, but that's what you get on Friday in an uncertain market. The gold market, the fear factor is still pointing to the upside, and this little pattern here we were talking about last time here was in 3 waves, so this is making just bear with me here while we sort of move in here a little bit. So we were looking at this last time in here in terms of an A and a B and a C wave, but as I mentioned that it wouldn't be an ABC wave until this top here was taken out through here, and if that was the case, then it would be an ABC, and you can trade to the top of Group 1 here, the 10, the 20 and the 30 as subgroup 1. Take the money at 1630 and then basically wait for the 1630 to become support, and then move up from that point there, and that's what you would do. If this 1630 became support, you could trade up to the 1650 here, okay? And that's probably likely as well, because we're seeing this as the ABC correction now, and we'll be looking for 5 waves up. But the 5 waves up is not there yet. We've got 5 waves in terms of, we've got 5 waves from this low to this high here, so up for 1, back for 2, looking up for the 3rd here, coming back for the 4th, and there will be a 5th wave coming up through here. So we're likely to see a push up through here for the 5th wave. And once we've got that 5th wave up there, that would be, I'll just go over that, would be up for 1, back for 2, up for 3, back for 4, and be up for 5 to here. Then we'd see an A and a B and a C wave across here. I would imagine that it would stay above the 1620, and then once it gets back up to 1630 again, then it will push up to here. Now, if something sort of happens, which it certainly could before that ABC rocks out, we could see a sharp move straight to the 1650, so you'd have to be pretty quick on that move there. I guess what I'm saying is that the market shouldn't come down below the 1617 again, with the support on the 1620 here. So bottom line is, yes, the market will move up. It's just a matter of what pattern it will unfold in that, but it should stay above that 1620 there at this stage. Okay, for the currencies, the US dollar index, we were looking at this being the third wave down through here, fourth wave moving up through here. So that looks done and dusted now, and we'll see a five-wave move to the downside through here. So what I can sort of see so far in this little tiny move down through here is I can see five waves in there. So we'll see a three-wave counter trend, maybe back to the 74.30, and then another wave coming down. So basically we'll see down for one, back for two, down for three, back for four, and down for five, coming in through around the 73 mark here. But as you can imagine as well, what happens on August the 2nd is really going to make this volatile. So bear that in mind there. So we're seeing the opposite in the euro here as well. So the euro pretty much sort of panning out as we were sort of thinking it panning out, in terms of that little push and that pull there was actually that little one in there and that one there. So we can kind of bring that into there now, and we'll be looking for this moving up through here. But in this moving up through here, if this is going to be the case, then we'll be looking at this moving up here for wave one, and then we'll be looking for a move to wave two to come back, and then a powerful wave three sort of moving up through there. So this is the 144 here. So if we look at that on a closer note here in terms of a shorter time frame here, this is the 30-minute chart here. And I guess we're looking for five waves up. So we'd be looking for up for one here, back for two here, up for three here, back for four here, and then up for five here. So we're looking at the ABC correction unfolding through here. So just, it's close of business on the Friday, Saturday morning, whatever, and opening up at New Zealand time on the Monday. So, it's going to get a bit messy around here. But what we're looking for here, what you want to be looking for, is support on the 144, and using the 72 here, the 14372, and this little subgroup 2 here is support, and being long above that move there for a third wave up. So looking up for wave one, back for wave two across here, and then wave three moving up, but looking at a smaller ABC across here, and eventually looking at this support here. And the same with the Australian dollar in a way as well. The Australian dollar, we were looking at this on whenever it was the last time, and we're looking at this being an overshoot pattern coming across the 1110 here, and the distance that normally travels above is the distance that travels below. So we're looking at this little marker here suggesting down around the 109.20 area there. So that's sort of played out, but we're looking at this in terms of an A and a B and a C wave moving back into here, and any strong move that we're looking for up here would be to go long. So this move through here would have the little five wave structure in there as well. So we'd have the little five waves up and a little ABC back in across the 1110 here. Once that's complete, we'll be seeing that push to the upside. So we can drill into that as well. Here we are drilling into that little move here coming up. This is a 4-minute chart coming up with those little five waves there. And the five waves would be something like this here. I know I can see another way to count that as well. So that's, but either way, up for one, back for two. We'll be looking up for three to here in terms of 1, 2, 3, A, B, C for the fourth, and up for the fifth. So we'll be seeing this is the fifth, or this is the fifth, depending how you count it. But let me have a closer look. It's could be, but look, anyway, look, just the point is that in one way or another we got five waves to here or five waves to here, and we'll see an ABC correction. So the ABC correction could already be into play here, but whichever way it's going to happen, the 61.8% here would be where it pulled back to, which would be the midpoint, which would make sense, the 109.50, the midpoint. But this would be the volume support here. Obviously, this is support one here on top of on top here with this here, but it could come back to this 61.8 retracement level here. So a little bit tricky. Allow the market to open and do whatever it is, but to build positions in here once it's either if the market moves straight back up onto the 110 here and starts to move up here and get support on the 10, 20 and 30 here, then you want to be scaling in long at that point there through that micro group 1 there. If not, and it does pull back into here, then allow it to pull back into here and use your own noggin to allow it to find support. And if it does come down deeper into the midpoint here and then starts to move up here and find support on the 72 here, then scale in from that point. And in fact, scale all the way in, all the way through here. And build positions to the long side, because we'll be looking for a third wave to move to the upside. So yeah, all positive and strong on the dollar there, but weaker on our stock market. So they're doing two things there. Yeah, so see how you go with that. Yeah, so that's the way it goes. Strong in the currencies. And weak in stock there. So there's a divergence there that will certainly catch up with each other. But trade the numbers, trade the levels, and use stops and scale in and out of the market, and take it while you can. Alrighty, so that's sort of it in a way. See the Australian dollar going up and the euro going up and the US dollar index going down, and still further weakness in US and European markets, and yes, but that Tuesday for either a gap down or a sharp reversal to the upside. So yeah, a bit tricky on that nature there. But in trading stock, with our on the local market here, which is really what it's all about for us. And we see, as I mentioned here, we see this little 1, 2 into play, the third wave coming down. We'll see a fourth wave and a little fifth wave to come down. So we could get the reversal on that Tuesday or that Wednesday morning for us. And that's why we're better off taking the money as we move down. So we did that on Friday, suggesting to take 30%. We'll do that on the Monday as well, and on the Tuesday as well. So we'll try and be sort of a little bit empty on the on any big gapping or reversal day on the Wednesday morning, because we don't want to get trapped. Like I say, better off to miss it than to have a loss. Okay, good morning and good luck.